Alright guys, so on this part of the course we're going to be going over trading large zones. So when you get a zone that's 20 to 30 points on ES, sometimes there's 100-point zones when you look at NQ. Those are pretty big zones, whether it be supply or demand. And there's a very good chance that when we get into a zone this big, that we are not going to bounce right away. So if we have a larger zone, the higher time frame, like the 5, 10, 15-minute charts, are going to be a lot better for finding the reversal. And if we have a 4-hour chart or below, usually it's fine to use a 1-minute or 5-minute. But when you get into those daily zones, weekly zones, you're going to need to higher the time frame to really find a good reversal. So let's take a look here. So if we're looking at ES here, these zones that I have drawn right now, this zone is from about 40.75 to 40.55. It's about a little less than 20 points, but it's right around 20 points. And we got a nice bounce right away from it. So this isn't a huge zone, but usually the smaller the zone, the better you reject. So up here, this is this 4-hour zone that we had this morning, go from 41.60 to around 41.70. That was about a 10-point wide zone, and we reject even better on this one, right? Now, if we start to look at maybe this daily zone that I have drawn down here, this goes from 39.50 to 38.70, right? So that's like 70 points. And there's a very, very good chance if you're looking at a 1-minute chart, when we come down here, you're not going to bounce off right away, right? So you're going to need to look at a daily chart. Maybe you look at a 15-minute, maybe a 30-minute chart, or even an hourly chart, and those are going to be showing you the bounces a lot better. You can even see how good you can day trade off of these hourly charts. So you got a really nice bounce off of this 2-hour zone on this hourly chart. If you took a long position here, put your stop loss below the low, you're only risking about 13 points, right? And your target is probably going to be VWAP or supply, right? So the supply is up there, 60 points, which is quite a bit. Maybe you scale some out at VWAP, which we're at right now. But as you can see, that's a really good risk reward. It's around a 4.5, 5 risk reward. But once you get these bigger zones right here, you're going to want to use an hourly, 30-minute, 45-minute, 15-minute chart. If you look at a 1-minute chart, it's not going to look super pretty. So, like, let's look down here, for example. Down here, this is on an hourly chart in this daily demand zone. We have a really nice buying wick, 2 buying wicks, big buying wicks out of this demand zone, right? So once you saw these 2 happen, you could enter next candle. You have a pretty tight or pretty big stop loss, so depending on where you got in, you can adjust that, right? But it's a very good risk reward either way. You're making good profit. And if you look at, let me keep this circle here. If you look at a 5-minute chart, let's see what it looks like. So 5-minute chart in this daily demand looks okay. Doesn't look too bad. There's kind of a double bottom here. Kind of bottom out there. This next candle moves down, kind of touches the body. I'd say that's a double bottom. You could enter here. That would have been a better entry probably. Stop loss is now 12 points. That's even better risk reward, right? Sometimes they do bounce right away, sometimes they don't. But usually the higher time frames look a little cleaner, right? And if you look at a 1-minute chart, let's see where this is, all the way back here. So a 1-minute chart, this doesn't look very clean, right? You might have thought, oh, we touched here, we're starting to curl off, or I don't know, we're bouncing out right here, or we're bouncing out here, right? So it just doesn't look as clean, doesn't look as pretty. So 15-minute, that's where you start to see a little cleaner action, a clear kind of double bottom right here, right? And double bottoms are very good to see in demand. 30-minute, again, gets it even cleaner. 45-minute, even better. And then an hourly probably looks the cleanest in my opinion. Maybe, yeah, hourly definitely looks the best. You can see those clear buying wicks. Let's check the volume. So you got clear buying wicks, you have clear buying volume coming in compared to the previous candles, big selling. And this candle, if you weren't convinced to get in down here, you could have gotten in up here for maybe a little swing trade, seeing all that big buying volume come in. And we ended up rallying the next day as well. Same thing goes with supply, right? I don't have any huge supply zones, right? But it's basically the same thing. If you have a big daily supply zone, then you're going to want to lower the time frame. So, weekly zones work the same way, right? Weekly zones are going to be usually bigger zones. So like this is a weekly supply zone right here. Label that weekly. So this is a weekly supply zone. It's from around 45.35 to 46.35. It's right around 100 points, right? So if we are looking at this chart, right, and let's say we come up here and we're looking at a 1 minute chart, 5 minute chart, 15-minute chart, there's probably a 80% chance we don't reject right away or have a clean looking rejection on those time frames. When you get to a weekly chart, you're probably going to want to look at a daily time frame to really see a rejection, because we might be trading in this zone for the whole day. But if you look at the daily chart, then we might have a candle that has like a topping wick out of it, right? But if you look at a 1 minute or 5 minute, we're probably just going to be trading all up in this area. But then the daily looks like this, so the next day you'll know probably going to move down. That's a terrible candle because you can't draw as nice with these. But you get the idea. Just if it's a weekly zone, maybe look at the daily, some 5 hour, 6 hour, 4 hour time frame. It might work better for a rejection. And if there's a daily time frame, usually the 4 hour, 2 hour, 1 hour, 30-minute, 15-minute time frames are going to show cleaner bounces or reversals compared to a 1 minute or 5 minute chart. So on to the next part of the course.